Hello, my name is Yves Longchamp. I'm Head of Research at ETHENEA Switzerland. The US economic cycle has probably entered the late phase. It means that we will have a slower growth, and this is indeed what we do observe. If you look at unemployment rate, it remains more or less constant at 5%. If you look at consumption, private consumption, it also slows. What we should or what we could observe to have a new cycle would be either higher wages, which would boost consumption, or to have a weaker US dollar that would help exports, or to have a return of an industrial production cycle and then more investment. But we don't see that for the time being. What does it mean for inflation is different, because the inflation usually comes late in the cycle, and we do expect inflation to pick up in the coming months. And in the same vein, we expect the Fed to hike rates for the second time in June this year. In comparison to the US, the European cycle is younger, which means that we have some more growth to come. And we do observe an unemployment rate which is going down at about 1 percentage point per year, which is quite fast. And we do observe also a private consumption pick up. The main risk in Europe is not so much on the macroeconomic side, it's much more on the political side. In the coming weeks, we will observe a Brexit vote, we'll observe a Grexit situation, and we'll observe as well a Spanish election. That will create probably a lot of uncertainty, and thus we remain pretty cautious on our investments. In China, we were surprised by the capacity of the government to stop FX outflows, to generate a new mini-cycle with fiscal stimulus and credit stimulus. But this is unlikely to last in the second half of this year. Keep in mind that in January, when growth slows in China, it generated this market turmoil. And the risk that it happens again in the second half of this year exists. And thus, we remain cautious in our investments. Goodbye and see you soon.